may wonder, is the employee retention credit taxable income? In this video, we provide an answer and additional insights for those who took part in the program. Let's get into it. Refund versus tax. Simply put, the ERC is not a tax. It's a refundable tax credit for qualifying employee wages. You omit the ERC from your gross income. The credit is subject to expense disallowance rules, subject to tax under IRS Notice 2020-21, Q&A 60-61, and FAQs 85 and 86. Understanding all these rules can be mind-boggling. FAQ 85 states that the IRS code disallows a deduction for wages paid equal to certain credits in a tax year. This requires you to reduce your aggregate deductions by the amount of the ERC credit. FAQ 86 states that employers receiving a tax credit for qualifying wages and healthcare expenses do not include the credit in their gross income for federal income tax. You do not enter the credit reducing the employer's applicable employment taxes, nor do you include the refundable portion of the credit. Impact on tax return. While the refund is not taxable under IRC Section 280C, the credit amount creates a reduction in wages matching the amount of the credit. This reduction occurs in the year the wages are paid, even if you have received the refund. Partnerships must file an amended administrative adjustment request. Businesses file amended income tax returns for years they're claiming credit and adjusting wages. ERC versus PPP. Even if your business participates in the Paycheck Protection Program, or PPP, it may qualify to receive ERC. Changes made by the Consolidated Appropriations Act, CAA, of 2021 allow businesses to take advantage of both programs. The CAA reverses IRS rulings and allows deductions relative to PPP loan forgiveness. The IRS used expense reimbursement case law and Section 265 of the tax code to make their determination. The ERC expense disallowance uses Section 280C, which covers tax credit reimbursements and their relation to expenses. PPP expense disallowance occurred in the same year the borrower was receiving funds. So, for example, if you file for 2020 ERC in 2022, you cannot take the expense disallowance this year because it applies to 2020. There is no deferral of income relating to ERC after 2020. The reasoning is that the business satisfies requirements for receiving ERC in the year they can claim expense disallowance. Revenue Ruling 2020-27 applies, and an expense reduction must occur in the same year as when you earn the credit to comport with Treasury regulations, sections 1.28C-1. Recognition of income and deductions are made on an accrual basis in the year when 1. All events occur that fix the taxpayer's liability for payment or the right to income, and 2. You can decide on the amount with reasonable accuracy. Applying the rules is not easy because neither PPP nor ERC is an income or deduction. Never applied? You cannot claim the credit on your annual income tax return. Because ERC is no longer available, the only way to claim any credits you qualify for is to file an amended return using Form 941X. The government allows businesses 3 years from the date of the original Form 941 filing to submit an amendment. If you did not file for ERC in 2020 or 2021, there's still time to do so. To file a claim, amend the return for every 2020 and 2021 quarter where you qualify for ERC. The best way to assure you receive all credits you are eligible for is to contact a professional familiar with ERC tax returns. We started with the question, is the employee retention credit taxable income? The answer is no, but it does impact your income tax return. The benefits of receiving this credit far outweigh its effect on your taxes. There's still time, as of when this video goes out, to file if you didn't apply for ERC on your 2020 and 2021 quarterly payroll tax returns. Contact ERC today to schedule a consultation. We'll answer any questions you have and assist you in filing amended forms for qualifying quarters.